platform and expanding earnings base across key markets. At its 4th annual general meeting held in Lagos, the company assured stakeholders that dividend payments will resume once regulatory conditions are met.
In our opinion, the accompanying financial statement...
It's the 4th annual general meeting of Access Holdings PLC, and as expected, shareholders, stakeholders, business partners and members of the media have gathered to review the group's performance and understand its financial results for the 2025 financial year. Seated on the high table are Chairman of Access Holdings PLC, the Group Managing Director and Chief Executive Officer, non-executive directors, executive directors and other board members, all set to provide insights into the group's performance and future outlook. As proceedings begin, shareholders raised key questions on the company's financial performance and growth trajectory.
Somebody asked the question, what indicators should shareholders look for as we move from scale to value? Well, obviously, the first indicator is return on equity. And we want to ensure that the return on equity far exceeds the cost of capital that our shareholders who have put their investments into our business have. The second thing you look at for us, and somebody mentioned it, is the earnings per share.
The numbers tell a positive story. Profit before tax rose by 16.2% to 1.01 trillion naira, while total assets expanded by 24.2% to 51.56 trillion naira. The growth was driven largely by increased investment securities, customer loans and trading assets, and the chairman clarifies that the non-payment of dividends aligns with regulatory requirements and compliance within the banking subsidiary.
The profits to pay the dividends are in the books of Access Holdings. We don't even have to make the money. The profit is there already in the books of Access Holdings. So once we address that issue, we will resume our dividend payments.
Speaking with journalists after the meeting, the group's leadership reassures shareholders and investors of its commitment to delivering long-term value.
So we get to a point where you find out that today we're no longer talking about acquisitions, building acquisitions and expansion. So we are talking about making sure that the capital we return is able to support us, our businesses, to optimize. And when it optimizes, what happens? You're going to have surplus capital. What are we going to do with it? That surplus capital will come back to shareholders.
The group says its strategy remains focused on profitable and sustainable growth, backed by prudent capital management, strong corporate governance, and strict regulatory compliance.